Oil prices ease from sharp spike. Tender dollar helps. Oil prices ran out of steam on Tuesday after gaining more than $5 a barrel inside the preceding session, with worries that surging crude will feed right into a demand-killing recession slightly outpacing endured concerns about tight delivery. Brent crude futures for September agreement fell 43 cents to $105.84 a barrel with the aid of 0446 GMT. The agreement rose 5.1% on Monday, the biggest percent advantage considering that April 12. WTI crude futures for August transport dipped 28 cents to $102.32 a barrel. The agreement climbed 5.1% on Monday and the biggest percentage gain when you consider that May 11. The August WTI contract expires on Wednesday and the extra actively traded September future become at $98.98 a barrel, down 44 cents. Oil fees had been whipsawed between concerns approximately supply as Western sanctions on Russian crude and gas resources over the Ukraine battle have disrupted exchange flows to refiners and end users, and rising concerns that valuable bank efforts to tame surging inflation might also cause a recession that might cut Destiny gasoline call for. The underlying supply call for imbalance is as tight as ever, mentioned Jeffrey Haley, senior market analyst at OANDA. In a word, oil costs may also have peaked, but they certainly don't look like they are going materially lower from right here unless we get a huge surprise from OPEC+. U.S. President Joe Biden visited top oil exporter Saudi Arabia Ultimate Week, hoping to strike a deal on an oil production boost to tame gas prices. However, officials from Saudi Arabia, the de facto leader of the Organization of the Petroleum Exporting Countries (OPEC), did no longer supply clear assurances an output boom changed into secured. Warren Patterson, head of commodities strategy at ING, said in a Observe that the marketplace has had time to digest President Biden's go-to with the end that it is not going that OPEC and its allies along with Russia, referred to as OPEC+, will growth output more aggressively than deliberate in the brief term. Oil costs were backed via a softer U.S. dollar on Tuesday, which stood round a one-week low degree, making greenback-dominated oil slightly inexpensive for buyers preserving other currencies. A weaker USD provided guide to the market, in conjunction with the wider commodities complex, ING's Patterson mentioned. The forecast of oil inventories inside the U.S., the world's biggest oil client, changed into that crude and distillate materials might also have risen Ultimate Week whilst gas stockpiles in all likelihood fell, in line with a preliminary ballot.